Everyone, this is Brad Matheny. Today is the 20th of December. Yes, it is the Friday before Christmas. This weekend, we're all going to be preparing for the Christmas holiday next week. Tuesday is Christmas Eve next week. And I hope everyone has a safe and happy and relaxing weekend. Okay, so let's get down into it today. The markets are already down. S&P is down to 578.06, roughly trading down in this area here. So roughly possibly opening down in this area. That's a big gap down from yesterday, minus 1.38% roughly. We could get some movement up or down here pre-market, but this is a pretty big gapping downward pattern. The code, don't need code. We're looking at a gap potential pattern today in bearish trending. We're looking at, like I said, 577.98 now, down even further. We're looking at that breakdown event, which should find support up above this level, I would assume. So we're really looking at 568, 567 potentially being a very deep anomaly low. I think we're going to be looking at that base setting up into next week, moving higher into around the end of the year slightly, maybe back up into this 590, 592 area, and then rolling back downward, like I suggested, into this lower buy zone back over here. So we have our gap setting up very cleanly. We're down pretty hard. We're down into the lower support zone here that I suggested, which is this rectangle here, this blue rectangle right there. I really believe that the markets have unwound sufficiently at these lows to not be trying to aggressively chase this downward trend. I don't believe it's in our best interest, although there may still be some movement down today, another 0.5% maybe. It looks like we've already kind of collapsed overnight. And again, if we come over here and take a look at the regular watch list, you can see Japanese yen is down 620. That's the Japanese index, 225 Nikkei index. Bitcoin is down 4,000, down to 93. We'll get to that in a minute. German DAX is down 277. The UK is down 67. Gold is up $10. Nice to see. And let's take a look here at the dollar. 108, roughly 0.42. That's a huge number on the dollar. I mean, I don't think in my lifetime I've seen much above 115, 116. But 110, 112 is a pretty big number on the dollar. We're going to be looking at a pretty big breakdown already again, guys. Almost 400 points down on the NASDAQ. S&P is down, it says here 0.18, but it hasn't even started changing. That was yesterday's close. NASDAQ is down 1.18 right now. So be aware that we're going to be looking at a big gapping downward open. If you still have any put options or any trades protecting yourself against downside risk, this is the day to start pulling them off. Okay, this is the day to start booking your profits, moving into the holidays next week with no positions, waiting it all out. And again, remember, I told everyone to get to 80 to 85% cash way back here in October 28th, 27th. And the whole purpose behind that was to avoid this volatility. Okay, you can tell me all you want that this has been a great trading range, and it has been. Okay, don't take it the wrong way. It's been wonderful. It's been great ups and downs, big moves, big rotations, but also been very dangerous for those people that are fairly unskilled in trading. So be aware that, for some of you, it's been wonderful. For others, it's completely destroyed their Christmas and their trading account. And now we're getting into that anomaly event. We're breaking down into these lows, just like I predicted months ago. And we're going to be looking for this deeper low setup out here in January 21st, 22nd, 23rd, somewhere around that time frame. Then I think we should be off to the races to the upside. So this is potentially the first of a deep low bottom. This is the second of a deep low bottom. As you can see, looks like things got moved. I mean, ideally, I would have potentially said, hey, look, you might want to be able to buy into this zone area here. And it may not be a bad idea to try to potentially buy into this zone area for this recovery. You do have a fairly solid upward move, about 3%, potentially moving higher here, possibly back up into the 595, 594 area. But again, that's going to be fairly short lived. And I think we're going to see a downward trend of about 4%, 4.5% down into this 570, 572 area low, then move out of that into the inauguration. I think that, what's going on in Washington, what's going on with the budget, and what's going on essentially is that, extreme tightening, extreme uncertainty into the end of the year. So let's take a look at the QQQ, see where the Qs are trading. 505. Look at that. Way down into my deep, deep low. Now, we had a 500 level target. I had a 500 level target down here. We're gapping down into this area right now, 505.77. So we're probably going to get this move downward here into this 500 level right before Christmas. Well, let me draw it back over here where it actually will take place. Gap move down into this 5 to 500 right before Christmas, and then basing and then attempting to move higher, and then rolling down into this lower low, and then attempting to move higher afterwards. So there's our moderate rotation of price playing out very cleanly. Now, again, we've broken down. We should then move into the consolidation phase, which I think is going to be this move into a brief little breakdown, looking for a low, and then back up out into a rally phase. Okay, gold and silver still struggling to find a bottom. Looks a little better, flagging out. You can kind of see this little flag set up here. Gold and silver are really just basically struggling for support. Very unusual move here, but we are getting kind of a flagging base bottom setup here. I'm looking for some strength to form, not seeing it yet. So again, urging traders to stay away from gold and silver until we see some real strength. We need to see that probably by a weakening dollar. Again, 108, 109 on the dollar is quite strong. So we need to see the dollar weaken a bit if we're going to see metals start to play out. And again, this is a big move in the dollar. Let's come back over here and take a look at the dollar just real quick. Look at this strength. This is daily. Look at this strength through the election and into the election. There's the election. And so we went from 103 to 108. And again, these are the highest levels we've seen since way back over here in 2022. Okay, so there is no reason why we couldn't see the dollar move into a weakening trend here. We just got beyond this Fibonacci amplitude level, Tesla amplitude level. We're rallying into this channel. We're at new highs. We could easily move up to the 109, 110 area. And then I think we're going to probably run into some resistance up over here around the 110 area. It's a big psychological level. So again, interesting how this is playing out with the dollar strength. A stronger US dollar really creates a lot of havoc in the world. And again, remember years ago, I don't know if you guys remember this, but years ago, long time ago, this guy, Canadian guy, was talking to me, and he was like, "Oh, the dollar's going to weaken. The dollar's not going to, And this was back in 2020, maybe 2019, and we made a little $1 bet that the dollar would strengthen, back up, and become the dominant currency. And he made a $1 bet that the dollar was going to collapse. There's nothing holding it up. It's all a house of cards. Well, I wonder what happened to that guy. He's uh, I'm not going to tell you his name or where he is. Let's just say he's a Canadian guy, and he's probably looking at this right now, going, "What the heck was I thinking?" So, 108, 110, or 110 for the dollar is massive. I mean, you can see here we don't have much to go off of, but this 114, 112 area is very, very big for the dollar. If we get up into this 110 area, I would be very concerned that we're going to get some sort of a rollback period back over here. And this is just a dominance mode of the US dollar and the US economy. That's all it is. It's a big dominance mode taking place, okay? So we go back over here to the SPY, and like I said, gold and silver, because of the dominance of the US dollar, I would continue to be cautious until we get some real base bottom forming again and the dollar trend weakens. And that may be till after the inauguration. So we may get stuck in this range until after January 21st, or at least after possibly the new year. So in the meantime, like I said, just be cautious. Gold and silver are going to try to base. They're holding up actually quite well. When you look at this long term, having the strength of the dollar the way we have over the election, this was a weakening of trend because of the dollar, a rebounding, and we're holding up quite well over here because of the dollar. Same thing with silver, even though we're below these lows and potentially moving downward here for silver. That dollar strength is very dominant in the metals markets. And the fact that we're holding up over here on gold and a brief low over here on silver, we're holding up quite well. It's just that dollar is really putting pressure on the metals right now. Okay, Bitcoin down. Oops, let's go back to silver. Go back over here, go to Bitcoin, and there's that big reversal. So this is weekly. Let's go back down here to 4 hours, and you can see how this is playing out. So we broke down into consolidation, rolled a little higher, broke down all the way below my expected level, 94, 95,000 area. We're at 93.5. We're a bit lower. Let's see if we find any resistance or support. We've got moderate support right back over here. Touch that briefly. So it looks like the new consolidation area off of this purple pattern, consolidating down, big consolidation, and then here's the orange level. So this orange level looks like it's breaking down to here. And this yellow level channel looks like it's breaking down to here. So there's our consolidation off of the orange channel. And that would mean that we would be looking at a deeper low, potentially down into potentially this area. So understand that this is the excess phase peak playing out. You've got the ultimate low of the purple area setting up right here. So this is the ultimate low of the purple area. But this is the consolidated, congested area of the orange, likely going to break out and try to move down into this area. Oops, sorry, I got the sniffles this morning. And we are, again, really just letting this play out. We do have a chance that we're going to run into some support level off of this low. Very interesting that this low came back into play solidly. It's bouncing off support here, 92,244. I'll bet you there's a lot of people that never even thought that Bitcoin would be back below $100,000 aggressively like this. We do have the ability to negate back to the upside off of this level, but at this point, it's playing out pretty strongly. And you've probably got a 65, 70% chance you're headed right down to this $83,000 area. So be aware that the excess phase peak patterns are playing out very cleanly. We would be watching for any new pattern setups and go from there. So we're moving into the end of the week, right before Christmas. And as I mentioned to you guys yesterday, get into a position where you can walk away from things next week and not really worry about anything. That's what I'm going to be doing as well. Okay, guys, that's it for now. Back to the SPY. And let's make sure to try to get some comfortably today. As I mentioned to you, today's pattern is a gap pattern down here, and gold pattern is a crush pattern. So, should have brought that up. Back over here on gold and silver, be very cautious of the big crush pattern. Crush patterns can either be very big to the upside or very big to the downside. Given where we're at with this, and given that we are in bearish trending and explosive, and the crush pattern is in trend mode, we are in a downward trend right now, obviously. So my assumption, is the crush pattern would be bullish at this point. That's just simply because crush patterns typically go against the trend. So at this point, given the fact that we're bullish, I think we're looking at a potentially big upward move, and we'll just have to wait and see. So I would be looking to buy silver above 29.75, and I'd be looking to possibly buy gold around above, let's call it 26.30, 26.27, for a potential rally up here to 26.60. Maybe silver rallying up here to about $30. Okay, that crush pattern can be a very good signal today. It can be a big move, but you just want to get in and out. Okay, so we'll see how it plays out. All right, guys, back over here. Talk to you later.